it's definitely getting harder to do this as well. But welcome back to the stream. Welcome back to another video. Today, in this next topic, we're going to talk about how to get approved for a Tesla auto loan, or really just how to get approved for any auto loan. I'll give you my feedback on for new car buyers or new Tesla buyers, and what to do to if you are planning in the next month to buy a Tesla, or next 3 to 6 months, some tips that you can actually do. And of course, we've got a tweet as well from Car Sales Guy, not Car Dealership Guy, Car Sales Guy, on the tips that they have on what to do when you're buying a vehicle. But I'll also give you my feedback, but we'll definitely get into it. But if you're just joining in, my name is Dennis. I love talking about Tesla hacking, as I like to call it, but basically just getting the best deal on a Tesla at the best financing rate. So if you're interested in any of that, please hit that subscribe. And today's video is actually sponsored by my Patreon link down below in the description if you want to support the channel, but more on that later. All right, so let us take a look at this. So shout out to Car Sales Guy. Creditworthiness plays a massive factor in your ability to buy a new or used car. So what do dealers and lenders look for? Here are the do's and don'ts of credit. So low credit utilization, your revolving balances. So of course that means like don't use your credit cards as much, don't max them out. And or if you have a good amount of credit cards, make sure your credit utilization is very, very low. So if you've got $1,000 on your credit cards, make sure your credit card limits are like $20,000, $30,000, and you're only using a small portion of it. If you have $1,000 of balance and you're using $1,000 of your credit limit, then it's not necessarily a good look for auto loan companies, because when they hit your credit, they are not going to like to seeing that you max out all your ability. Long-term accounts, that makes sense because it's just basically saying that you have credit cards and or other loans and you keep them for long times, you don't close them. On-time payments, that should be self-explanatory, but basically do not be late longer than 30 days. And if you are later than 30 days, ask those companies, those credit card companies, see if they can give you some sort of, I guess, like leeway, apologize to them and see if they can take it off or whatever. But your experience will be very closed or being traded in auto loan or lease. So basically saying like if you are buying a car, try and sell a car or trade into them so that they can see a 1-to-1 ratio. Like, and instead of acquiring a second car from that, they don't like that much liability out there at the end of it. Minimal inquiries. We talk about this a lot on channel, but that's just basically don't try and shop for a vehicle 3 months at a time. So that's why we do say, you really shouldn't start your application process for your loan financing until you actually get your VIN. But with a lot of things moving and a lot of moving parts, you should try and start like a week to 2 weeks out from your estimated delivery date, because auto loan approvals only last for 30 days at the end of the day, or 30 to 60 days for some banks. And so you really shouldn't try to keep hitting it or doing a hard inquiry all the time. But if you do hard inquiries, and as long as you apply to multiple places within 1 to 2 weeks, you should be perfectly fine at the end of the day. But anything more than that, or anything longer than that, that's where you got to be a little bit worried about. And then low debt versus income. That should be self-explanatory as well. Banks don't want to see a lot of debt, and they want to see a lot of income at the end of the day. That's the case of the don'ts. It's basically the opposite. Don't max out your credit cards. That makes sense. Numerous inquiries, right? Of course, that makes sense, because that shows that you can't get approved at one place, so you're trying to go to another place. So that just makes banks a little bit uneasy. Multiple new accounts. Yeah, of course, that's not a good sign either when you're trying to open up a lot of different credit lines and all that stuff. Multiple open autos. That's just more risk to them. They don't like seeing that as well. And then short credit history. New credit cards, new auto loans, of course, that's kind of all in the same everything else. Late payments, of course, that is the biggest no. Do not be late no matter what. Bankruptcies, collections, charge-ups, and then debt 2x the annual income. Yeah, that certainly is a big no. But shout out to Car Sales Guys for putting this and wrapping this all up in a tweet. If you are a first-time auto loan buyer, a first-time Tesla owned buyer, these are my tips for you. The first thing is, unfortunately, most likely you will have to go through Tesla financing, and you will have to use Tesla financing to get the 5.59%. I mean, there is still a light at the end of the tunnel. We'll talk about that, what to do after that. But because Tesla financing is the what's called a captive arm or captive lending, even though they kind of pawn you off to Wells Fargo, Chase, or Bank of America, they have the best relationship with those banks. And so they'll want to try and get you approved for your deal. And so you might have to go with 5.59%, but I mean, there's still light at the end of the tunnel. I would still take a shot because your credit's going to get hit anyways when you do Tesla financing. I would still take a shot at credit unions to try and get a lower rate. If you don't know where to start, there's plenty of videos on the channel that we talk about at least once a month with the best credit unions that are out there. And on top of that, there's a Patreon link down below and also a YouTube join button where you can get access to my list of credit unions that all have rates lower than this 5.59%. But even if you have to go with Tesla financing, even if all the credit unions reject you at the end of the day, don't worry, because as long as you get the Tesla financing loan, you pay 6 months. It has to be 6 months of payments after that. That shows to the credits that you can actually pay this vehicle. That will bolster your credit. And then what you can do is a refinance after that. Refinance to one of the credit unions that have lower rates out there. And then hopefully you can get a rate that's 3.5, 3.99, 4.5%, and save a little bit of money if you keep this loan for the rest of the term. And on the other flip side of that is Tesla is going to require you to at least put some sort of down payment. I think the lowest I've seen is $1,000, but I don't know how accurate that was. Most likely it's going to be $3,000, $4,000, maybe even $5,000. And if you're a first-time buyer, if you're a first-time owner for a Tesla first-time auto loan purchaser, you're going to have to put 10 to 20, maybe even 30% down right off the get-go, because that's kind of, you're going to have to prove that to Tesla and to the banks that you can, purchase the vehicle. And the reason why is because they don't want what's happened to be an upside down process or upside down on the loan. They want you to make sure that you can purchase the vehicle. They want to make sure that you can own the vehicle. And worst case scenario, like if you can't, pay the vehicle and they have to repo the vehicle, they want to make sure that they're okay, they're set, and that they'll be able to sell your vehicle or wholesale your vehicle without losing too much money at the end of the day. So those are my tips, or actually I guess I'm setting the expectation for you. And we're starting to see that. Here's a comment I got earlier today. You can see right here from Weston Daniel. So thank you, Weston, for being out there and putting yourself out there and putting yourself out there and putting this comment. They basically said, I canceled. Quote, Tesla Financial wanted $20,000 down on a Model Y with an 820 credit score. Of course, that's only a snippet of the situation. We don't know what more could be there, more divulge in that, but banks are certainly starting to tighten up. And they don't like the risk that Tesla has with dropping the price of the vehicles $13,000 overnight. So there could be more to this that we're not actually seeing, but $20,000 is certainly a lot higher. I think that's 40% down on a Tesla Model Y. That could be a $50,000 car or $60,000 out the door. So that could be 30% down. But, I wouldn't be surprised if we're going to start to see a lot more than that. And if you're a first-time auto loan, I mean, that could be the missing key to this. Like, yes, they could have an 820 credit score, but they probably could have never financed an auto loan before. And that first auto loan is always going to be a doozy. And so, just be aware that if you've never purchased an auto loan before, expect the worst. And so the worst could be $20,000 down. But the one thing is, you can push back with Tesla financing. Like if they say, hey, we want $20,000 down, this is the term, this is the rate, you can ask them, you can ask Tesla financing to what's called rehash your deal, relook at it, talk to banks again and see like, hey, like I can only do $15,000 down or $10,000 down and see what they come back with. But even if they say they want $20,000 down, I would still take a shot with any of the other credit unions. If you're buying a car in the next 30 to 60 days, my tips are really just follow all of the car sales guys' tips. Make sure your credit cards are as low as possible 30 days before you actually do some sort of credit hit. Make sure you've got no hard inquiries or no high debt or late payments or anything like that, because you want to make sure your credit looks as clean as a whistle as possible. I can tell you from experience, when I purchased the Model X, they asked for everything under the sun. They wanted income statements, they wanted other statements, because banks are starting to tighten up. And on top of that, once you get to past like 80, 90, $100,000, banks get a little bit more antsier than usual. So they want to make sure that before they give you this loan that you can actually pay for it at the end of the day. So definitely some pretty interesting stuff. Let me know what your thoughts are. Let me know what the temperature out there is down below in the comments. Are you getting a crazy down payment request as well, or are you getting pretty much easily financing? We're going to jump into the live stream comments, but before we do that, this video is actually sponsored by my Patreon link. Down in the description, the Patreon link if you want to support the channel. So definitely check it out if you're interested.